This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Welcome back to another episode of Benzinga Live. And everything, we're getting a big bounce right now. Let me go ahead and pull up my Benzinga Pro real quick, and we'll just run through what's going on in the overall indices. And I've got my man, the stop hunter, Stephen Hode, hanging out backstage, who's going to be joining us in a minute. We've got some charts teed up as well. But yeah, I mean, today was kind of we had Meta and report earnings was up like 15%. The Qs were hot. Tech was leading the way, but there were some other sectors, particularly energy, that was lagging and is now coming back. So we'll take a look here. Take a look here at SPY real quick and go down to maybe a 5-minute chart so we can see just the past 15 minutes here, these three candles on the 5-minute chart breaking out, making new highs on the day. So it's certainly some good price action to see if you're long right now. And after a week where we've seen the S&P 500 move lower despite some strong earnings, it's good if you're a bull right now. Oh, didn't realize chart wasn't on the screen there. Sorry, guys. Here were the three 5-minute candles I was talking about. As you can see, we just broke above that 409 level. Looks like we're coming back down into that 409 level. What I was saying earlier with XLE was trading down on the day, actually about a little bit more than 0.5%, and has now come back and is pretty much even, still down slightly on the day, as you can see there, down about 7 cents. Qs, really strong day for tech. Qs up more than 2%, of course, again led by that Meta earnings, up more than 14% right now. We will get Amazon after the close today. Amazon up 4%. Heading into the earnings. All right, guys, without further ado, let's get to our first special guest of the day. Got the man, the stop hunter, Stephen Hode. Let's go ahead and give Stephen our very special Zinger Nation welcome. And when we come back, we'll be running through some charts and seeing Stephen's take on the market. Mr. Hode, how are you doing today?
Hello, Aaron. I'm good, thank you. Yeah, not bad.
Well, it's good to have you back on. All right, so I'll start. What have you been watching? I mean, outside of, like I said, Meta's been kind of the big news of the day. Outside of that, what stocks have you been watching?
Yeah, it's been earnings week, obviously. Well, big earnings for tech. It's been earnings week for a while, but it's earnings period. Tech stocks, like you say, the Metas, Microsofts, Googles, those guys. It's been quite an interesting week or so. Like you said, there's been a bit of a sell-off in the energy sector. So I've been watching crude oil quite closely. I suppose it's down to that demand type side issue again. People worrying about China, US, that sort of thing, dragging the price down.
Let me pop up your charts real quick. Do we have a chart of oil we can get to?
Yeah, right in front of you. Yep.
All right, beautiful. So walk me through this dip in oil and what's causing it.
Okay, so out there on the top right, you can see the current pullback in the price. But what's interesting is the two bits of information below. That's a commitment of traders data, and the large speculators are still bullish at the moment. So that's sort of a inverse of what's going on. Normally they follow the price quite closely, and you can see large commercials who would do the opposite, also going in line, which is against that sort of, the strategy I look at in there. So that's an unusual setup at the moment. But again, it's in this range bound 71 to 83 where it's just got stuck, and I think, we'll just drop down quickly to the other thing. Seasonality at this time of year, bottom left, is normally bullish, and the volatility, a bit like the VIX index here, is pushing up, which is a bearish sign, as you can just see there in the bottom right. But going back to the price, it just can't decide. You had OPEC Plus trying to cut production and push the price up, but then on the other side, you've got the people who are who are unsure where the world's going at the moment, and it's pulling it down, and hence you're in this sort of $71.83 bracket. But at the moment, people are feeling a bit more bearish.
Yeah, and how do you feel about, I mean, looking at energy as a whole? I mean, in times where you see oil like this come down, it's usually based on the demand side, and then you have, especially like China demand. We've talked a lot about China's influence in oil prices based on how their economy is looking. But how do you feel about oil overall as a barometer for looking at the global economy?
Yeah, no, I would have it. We've talked about copper as well. There's a few commodities you can put together in a basket, and crude oil being one of them. And if you are analysing just them, it looks flat, slightly negative on a global perspective at the moment, because you're introducing countries like China into the mix as well, Europe. It just feels a bit flat, undecided. There's a lot of stuff going on still with the interest rates, the banking. We just saw this week, was it First Republic dropped massively in stock price again, rearing the worries about finance as well, which would then impact these markets and commodities as well. So it feels overall, I've got a slight, if you're just looking at the raw data, slightly bearish feel to it.
Yeah, and it's interesting because, I think for a while, a lot of people have expected this economic downturn as interest rates have come up kind of globally, not just here in the United States.
Mm-hmm.
And we haven't really seen it. The economy's been pretty resilient, at least here in the United States. But, it does feel like potentially we are getting to the point where some of that, we're running into some of that economic fatigue where the global economy is finally saying, okay, like, we are starting to see maybe not a halt or some of these things breaking and like a huge crash, but maybe starting to slow down just a tiny bit. And like the only thing that kind of goes against that from what we've seen have been these really great earnings reports coming out by a lot of major companies. But again, that's important to remember. That was the last quarter. That was from January to through the end of March, not April at all. So I don't know. I mean, it's certainly an interesting time right now to be looking at some of these things.
Yeah, no, I agree. Watching the tech stock earnings this week, it's just balancing it out at the moment. And again, adding that indecision overall, because you're seeing the positives from those earnings reports, the negatives from the other side. And it's creating sort of an imbalance of, where does it go next sort of thing.
Yeah, and there are certain, I think indicators that so for me, like one thing I would love to be I should be watching right now is data when it comes to travel and like vacations, because I feel like that's an area where if you start to see that kind of slow down, like maybe people are like finally getting to the point where it's like, okay, we have a little bit less money right now, which we haven't seen yet. I mean, that was the biggest thing for me was, if you remember, like a few months ago when everyone was so certain we were heading toward a recession, that was the one thing to me that I was always like, well, when I travel right now, like everywhere is packed, the planes are packed, the restaurants are packed, and it's like doesn't feel like a recession. So when everyone was, calling it a recession, it was like, well, it certainly doesn't feel like one. So when it starts to have more of that feeling where it's like people are vacationing less, maybe eating out less, things like that, then that's when I'll start getting real worried about a bigger economic downturn.
Yeah, you're right. Because over here, I went shopping with the kids last weekend, and the shops were packed. People carrying bags around. It's not sales season, and I was just amazed. That people have all this cash when everyone's saying that there's no spare income around. Bills are up. It's a confusing message. So, from just the high street observations, it's a bit puzzling.
So I wonder if almost some of these, I wonder if some of the commodity markets that are signaling this slowdown are maybe like are actually acting ahead of the actual slowdown, or maybe that it is starting and it just hasn't trickled down to the everyday consumer yet. I don't know.
Well, they're futures markets, so a lot of this sort of, maybe if you go to the energy sector, you got to think airlines, for example, will lock in. Well, those that hedge their oil, the jet fuel into the planes, they'll be buying it in advance. whereas some take more of a risk and leave it. And there's interesting strategies around there, but a lot of those, maybe grains, food, that sort of stuff, like you say, it's a forward market, so you've got to, like you say, factor that into maybe that that pinch hasn't quite hit the man in the street just yet, and could be just a few months away.
Yeah, and again, like it's what I think could help right now is figuring out which data points can really give us insights into signaling when and if that is happening.
You could
Stephen,
look maybe at, I was going to say stocks like cruise lines, maybe, because that's more of a luxury type holiday. Things like your Carnivals, Royal Caribbeans, maybe stocks like that. See what's happening to their price, because they got hit heavily by the pandemic, the COVID pandemic. Maybe those more luxury brands. But then I've been trading some French luxury brands like LVMH, Louis Vuitton and all that, and they're flying still. So again,
that stock's been a monster. I think that the CEO or whatever is now the richest man in the world.
Yeah, he's beating Elon, isn't he, at the moment? Yeah. Arno, I think his name is. Yeah.
Yeah, Arno. I see a good question in the chat, Stephen, from Sabrina. Sabrina's asking, how do you see oil service providers like HAL, ticker HAL, performing over the next 6 to 12 months?
Yeah, so should we just pull up a chart of HAL and quickly have a quick look? Right, it shouldn't take too long. I have traded Halliburton in the past. It actually looks exactly the same as the XME ETF that we looked in terms of chart look. Next 6 months, it's put on. Let's have a quick look at the Fibonacci's. It's not looking very exciting, that's for sure. You can see this level 33.5 for them was sort of broke up, and it's creating this. It's called like an island gap reversal in technical analysis. You've got this gap, and it's creating this head. It's filled the gap back down. So I think looking at that back down to 28, if not maybe a bit lower, back down to those lows back in September of 22, which is $23. So I'll just expand it out a bit further, see if we can get a bigger picture. See, it peaked $43. It's a double top in there. Yeah. If you're looking on the raw price data, it looks a bit bearish at the moment, especially down to the bottom of that sort of double top. If I drew that on, sort of that pattern there, which would take it down into this sort of area. If you're following the rules of technical analysis, that is. In regards to the fundamental side of what's going on, it's a tricky one. It feels sluggish. I won't be very excited about this sort of trade. There is a slight uptrend there, but it's not a great picture.
Yeah, well, so while we're on the topic, Stephen, of different oil stocks, so ExxonMobil and Chevron are both getting ready to report tomorrow morning. Can we take a moment to do a quick preview of those charts ahead of the earnings reports?
Is it XOM, the ticker? I'm going to try and remember.
XOM for Exxon, then CVX for Chevron.
Well, Exxon looks very nice. Let's have a look where we could be seeing it. What I would also have a look at here is if there's any options traders out there, have a look at the money straddle positions for the expectations around the market of the volatility. You can quickly work out how far they expect the market to move in either direction after an earnings burst. So I would take a quick look at the money straddle price. You divide that into the stock price, and you can get an expected percentage move there. At the moment, I would say its next stop is 160. If it breaks up through here, it's struggled 120 area a few times, but it looks quite nice. 100 stop sort of area just under here. late 90s. But yeah, that looks not a bad oil stock. And the other one was
Chevron, ticker CVX.
So, before even drawing on that, it's a similar type of.
Yeah, I mean, Chevron and Exxon usually trade pretty similarly.
What you can do in these, there's another strategy called statistical arbitrage, where you put pairs together, strong and weak ones, to take out some of the risk and get some of the movement in there. And these are sort of stocks you can use that for. But again, for that, this one, 140 to the downside, down in here where there's a lot of support. In actual fact, there's a big gap here in the volume at price over here, down to 115 sort of dollars. Upside, back to the highs, 190. If it breaks, let's just try and get that down. So way up, $240 up into there. But that's that. There is quite a good correlation, and it's not so much of a lag like we talked earlier between the oil stocks and the actual price of oil as well. So, a lot of traders will look for what's going on in the oil price to reflect into the price of some of these stocks. So if we're talking bearish oil, then that's going to put a bit of pressure on any positive earnings numbers that possibly come out. But in terms again of pure technical analysis, both charts look quite nice.
Got it. Well, thank you for running us through those. So, Stephen, what else do we have on the docket for us today? Moving outside of energy.
Yeah. Okay. I don't know if you've been hearing the same stories as we have over here, but there's been a lot of talk about the dollar taking a bashing, and with the Chinese renminbi taking over and all these new countries joining pacts to create a new world order. So, and the displacement of the US dollar. So I've been following the dollar closely for the last few weeks. Have you heard? Has that been a big story over there in the States?
Yeah, I think there's been a lot of talk of the dollar losing its status as the de facto global reserve currency. What I'll say on that is, and I think maybe now more than ever, there seems to be some real risk or possibility of that. But there's been talk of that in the past, and it hasn't really changed much. I do think, it does look like to me that the dollar is set to keep going lower here. I don't know necessarily if that's a good thing or a bad thing, though. I really don't.
Well, that's the thing with currency. If it's lower, then that means exports and stuff like that are better because it's cheaper to buy US goods. So it swings and roundabouts, really. So I think it's more a political thing, but it's been a story that hits the media, quite a lot over here, and talks of the French president went over to China, and we got Biden doing Biden stuff. So it's just one of those stories that flags up. But I thought I'd have a really look at the long-term chart, and actually I don't think there's much to worry about at the moment. Like you say, it's swings and roundabouts on what to take. And in terms of current strength, it's sitting straight in the middle. At the moment, you've got the pound, euro, Swiss franc, the strongest currency pairs at the moment, weakest commodity ones, New Zealand and Australia. So if you're trading Forex, you can put some pairs together like that. So nothing massively exciting in FX, but it's just been a talked about story. So I just thought I'd throw it out there. And the last couple of things, I've got a couple of stocks that I like and are trading at the moment that might interest the viewers. The first one's called Flutter Entertainment. This is the US ticker of it. It's actually an Irish stock, and the Irish stock market's been flying for the last few months. And you might have heard of these guys because they're a big betting company. So they own company brands like PokerStars, Fox Bets, Betfair, huge amount of underlying slot,
FanDuel too,
slotting and stuff, gambling, and they're up 50 odd % so far this year, recovering nicely. Like I said, it's one maybe to watch. I think it's still got some good upside at the moment into this sort of 240, 250 area where they had the highs previously, and then it's off into no man's land. But in bad times, people like to gamble, spend their money, so it's good. And when they've got excess money, they like to gamble and spend the money. So stocks like this are like, it's a sort of no-brainer sort of thing. So that's one I've got on the radar, and I trade regularly. And like I said, that's the US ticker version of it, PDYPF. I think it's an OTC one over there, but in the UK and Ireland and Germany, it's a lot bigger stock with a big market cap.
Yeah, no, I didn't even realize these different brands that this company has. I mean, FanDuel's huge over here, as well as, like you said, Fox Bet, TVG, the horse racing channel. You know, they have a bunch of stuff.
Yeah, that's what I noticed. So when I drilled into them, I was quite surprised with what they've got, and then saw that price running up. So yeah, I'm watching that one closely. And the second one I've got is one called New Oriental Education. They're a Chinese online tech education, well, it says education company, online sort of training stuff. They had a big pullback in the price. As you can see on the left is the weekly chart, where it really smashed off down to lows, $7. Again, you can trade this on the US EDU's a ticker, but since then they've been recovering. They're getting stuck around this $50 mark, drilling in on the right hand side, the daily charts. See, the trend's been up for a while. Like I say, it's got to push through mid-40s, mid sort of area to get up to 59.60, but the momentum at the moment is quite strong on this one. The volume's up, and it seems a popular stock, and it's one of the more popular Chinese stocks I actually like to follow. So yeah, Flutter and New Oriental, couple of stocks I've got on the radar at the moment.
Yeah, and so I remember there was a big thing with China like a year or so ago where they said, like all education companies kind of got dinged. They said they like weren't going to be able to run for profit. Did they walk that back, or I don't know?
Yeah, I think so, because there's other ones like Tal Education. There's a bunch of them, all ADRs that you can trade in the US that have been actually performing a lot better more recently. So I think there's certainly been a shift there, and people are moving back into these type of stocks. So where we talked about Baba and Baidu's a few weeks ago, this is sort of a second tier stock. I think that it just maybe slips the radar sometimes, but can give you a decent return if it starts moving. Reasonably volatile, but it's on a up run at the moment.
Yep. Yeah, I'll have to add this to my watch list. Let's see what else we got. We got any other tickers we want to check out?
Unless have you got any you want to run through?
Well, I think while we were talking about China, I think it would be interesting to look at Baba real quick. I know you were saying off air that you were shorted a little bit, so I think it'd be interesting to take a look at Baba.
Yeah, sure. So this is a weekly look. So you can see, obviously, the long-term trend has been not good, as we've talked about. And they talked about splitting the company 5 ways, which brought in this sort of up run here. And since then, it's sort of paired on back. So I've been shorting it the last few weeks. If we drill in closer, more specifically, we remove the drawings, get rid of the mess. Here's a daily chart now. I'm still positive on this stock, but I trade it, in either direction when the signals are there. So I'm not shy of going short it either. At the moment, it looks like it could break down to sort of the 70 area. Looking at the chart there.
Wow. I mean, I'll tell you what, Stephen. If Baba gets down to $70, I'll take a position there. I'll start.
It's big good value, yeah.
Yeah. Interesting. Especially, like you said, they have that breakup still, which seemed to be, bring in a lot of investor interest, but maybe that went away very quickly, it looks like.
Yeah, it did. It was around this sort of period. You see the nice run up, took the news well, And then since then, I don't think there's been much of a follow through. So seen that bit of a downtrend. Like I say, I think it's still good value in there, fundamentally. Technically at the moment, I'd wait your time, like you say, to maybe see what happens next. If it breaks down, even at this level, $83, $84, it's still good value.
Yeah. All right. Well, Stephen, it's great to have you on. It's, I think next week we'll talk off air about it, but for the audience out there next week, I think we will be debuting, piloting a new show in the morning with Stephen, where Stephen's going to be running us through some news ahead of the market open pretty early in the morning here, but around lunchtime, his time in England. Stephen, I'm really excited for that.
Yeah, no, I'm looking forward to it. You guys can now wake up with a stop hunter. How exciting is that?
There you go. Yeah, I mean, and it's great too, because like we do the pre-market prep show starting at 8 a.m. But a lot of people are up before then. Here, 7 a.m. You're getting ready for your day. Maybe you want to just listen into what happened in Europe, while you were sleeping, or some of the big headlines from the U.S. that are coming out that early. And I think it'll be a great way to do that.
Oh, this is the early morning call. This is the alarm button snooze call that, I'm going to wake you up with and fill you in on what's been going on in Europe. And, tee you up for the day, for that first coffee of the day. Get you pumped.
Sabrina said, she said, excellent. Looking forward to the new program, as am I. All right, Stephen, well, enjoy the rest of your Thursday. Enjoy the rest of your day. Like I said, we'll chat off air about next week, get everything set up, and looking forward to it.
Brilliant. Thank you, Aaron. Speak soon.
Of course. Thank you.
See you later.
All right, guys. That was Stephen Hode. Going to go ahead and drop his YouTube in the chat if you want to go see some more great videos from Stephen. And look at that timing. We're doing well on timing today, because I see our next guest hanging out backstage. My man, Rob Roy. We're going to be talking about some different options plays that Rob's been doing. Take a look at some charts. And as always, when we're talking to Rob Roy, we're going to be talking about some fibs, some Fibonacci's. So always excited to do that. Let's go ahead, before we get to Mr. Roy, bring my Benzinga Pro back up, and we'll just do a quick rundown on the overall market. How are we looking here? Boom, S&P 500. I've been waiting for this breakout for a couple days now. I've been, I get it, right? We were talking with Stephen about energy's been trading lower. Like, there's these fears about a global kind of slowdown of the economy. So I get why the market's been kind of lagging, but I've still been like, all right, like let's get some fun. Let's get a little breakout day, and then we'll see what happens from there. And it certainly looks like we're getting that little breakout today. Looking at the 5-minute chart, looks like we're just about at the highs of the day. 409.15 right now. So we'll see if we can hold this 409 level. Taking a look at your Qs, which have been the leader on the day at 318, up about 2%. XLE, looking at energy, came back down a little bit. Taking a look here, you can see sold off a little bit back to around $83. Dow Industrial Average, pretty good day on the Dow as well. Financials having a strong day after First Republic has kind of dragged down all week. First Republic, by the way, bouncing back, up 12% today. I'm not hopping in here trying to catch a falling knife by any means. If you are very, very brave. You have a lot of, I'm not going to say it on air, but let's just say you're really brave if you're buying FRC down here. But who knows? I mean, when it's all said and done, maybe the people that were buying down here are the ones that are going to get rewarded. But I'm not doing that. But all right, guys, it is noon on the dot Eastern time. So let's go ahead and bring my man Rob Roy on. Let's give Rob our very special Zinger Nation welcome, and we'll see what Rob's been watching when we come back. Rob, how's it going?
Aaron, how are you, sir?
I am good. Beautiful day here in downtown Detroit. How about you? How's New York treating you?
Very nice. A little cool out today comparative to what we had seen, but overall happy to not have any snow.
There you go. All right, Rob. Well, you want to go ahead and pop your charts up and let me know what you've been watching?
Yep, let's do that. Let's see. I think we should be good there.
Perfect.
Perfect. All right. So the very first thing, Aaron, S&P 500, of course, how do we start off without talking about S&P first? So we're in a very crucial spot right now. We closed yesterday down here. We broke down into what we call a neutral bias as we closed on that down candle yesterday. Great gap up on some of the news, the earnings reports, Meta certainly driving things nicely. But the concerning fact is still where we are right now. We are pinned between the 8 and 21 moving average, so this pink and green line. And the green line is our 21 also gives us a confluence at that 40.93.74 level. So if we can break out of this range, either way, up or down, it doesn't matter, but we want to be out of that range to find some direction. If we can close above the 21, then I'll look for a pullback and a bounce for a bullish entry. If we close below the 40.94, I'll look for a retest and a fail for a potential entry. But right now, we're setting up where we have either one of them are possible. There is no clear direction just yet on where we're going to go.
Yeah, I mean, I don't know how updated this is, but what time frame is this chart?
This is a real-time chart.
Okay, but are they daily candles?
So I'm sorry, this is a daily candle. Yep, it's a daily candle, but the candle itself, current pricing is real.
Oh, okay. Yeah, so because I was going to say, it looks like we're kind of breaking out right here. I'd be curious to see, how much further would we have to go to clear that level on the bullish side?
Right, so overall on this intraday chart, overall very nice move to the upside for the day, right? So happy with that. Again, the gap up, and we've just continued from there. But we've got to compare. I think a lot of traders miss that they look at a time frame and they don't look at multiple time frames. Now, my charts, although harder to see this way, I'll explain what's there. The upper left-hand corner is a 1-minute chart, right? The one in the center top is a 5-minute. Bottom left is a 30, and bottom center is a daily chart. The one on the top right is 5-minute, but it's used for the intraday or pre-market rather candle. So I look at all 4 time frames. So when I go back and look, Aaron, at the daily chart, most traders, investors are focused back on what's happened at the end of the day. They come home, they sit down at night or in the morning before the market opens, and they analyze their charts, and they're doing so off of a daily chart. So we do have a little bit of a pop, but from a daily standpoint, we've got 7 or 8 days down from where we hit that high up here just a week and a half ago, and then that bounce today. So where we wind up after this breakout to the upside today, whether we go up or down, is going to be critical to the next step.
Got it. Yeah, I mean, it's like I said, like this week, it's been kind of, not the greatest price action if you're long, if you're bullish. But, I think a lot of people have been expecting that. So I wonder, how long we're going to kind of be in this range for before, like you said, we break to one side or the other.
So I think the Fed is waiting for the next shoe. It's not the rate hike. There's still a fairly high chance we're going to get the quarter point. I believe we're going to get another hike behind this. My guess would be a quarter, but I don't know until I hear what the Fed has to say. But I think we'll get one more hike behind it. I don't think we're going to see the drops as quickly as some people are calling for. I could be wrong. I hope I'm wrong. I just don't know if we are there yet. There's a bunch of factors still out there there's a lot of uncertainty and a lot of concern of, are we going to hold? You look at some of the housing markets, what's happening with prices. We're now starting to see some of the Florida prices fall apart a little bit. So sellers.
Wait, Florida real estate, you're saying?
Real estate, sorry. Florida real estate. In some of the areas are starting to give way. And don't get me wrong, there's still insanity of what people are looking for there. I was looking at a home the other day that's in Miami, and they're asking for 13. It's a $1.4 million value of the home, and they're asking for $13,000 of rent for the month. It's been on the market for like 9 months. Good luck.
Wait, give me those numbers again one more time.
Sure. The house is like $1.1 million, $1.4 million. I forget which one it was. There's two different ones I'm looking at. That's the value of the home, but they're asking for $13,000 a month of rent for that $1 million
Holy cow!
home. Yes,
That's insane.
And it's been on the market for 9 months. Hasn't rented. They've lowered it from where it was. I think it was upwards of 14 or 15,000. They were originally asking for it. It's not sitting on water, nothing like that. And if it was, it would be a much higher valued home than $1 million in Miami, since it's one of the hottest real estate markets there are. But I think there's just a bunch of other things that could fall apart with housing. You're seeing more layoffs. I think it seems that the news is keeping it a little quieter. You're not really hearing much about the Disney 4,000 layoff, and then the next company with the 9,000 and so forth. Amazon, again, with some more they're talking. So I think there's a couple of things we've got to be cautious of or know that they're out there before we pick direction of where it goes.
Makes sense. All right. Well, what else? Do you want to take a look at Meta's chart, or what other stocks have you been watching?
Yeah, so I did four different trades today. Meta was one of them. We called this one out to our traders this morning. We were looking at a bull put spread on this. We called it out as bull put spread below 229, which was down here, down below this level. We had to do a 227.5. We didn't get a lot of credit for it, but I wasn't surprised after the move we made. We picked up 35 cents. I could get out of the trade right now for about 8 or 9 cents. I've got an order in for a nickel to get me back out, but we took in a credit of 35 cents per share. And if we wind out of the trade today, we'll keep 30 cents of it. We'll give a nickel of it back. So overall, I like the move that it made. I was the first one to beat up Zuckerberg for some of the decisions he's made. And I'm the first one to give him kudos for taking the stock from where he did back at $100 and lower, and doubling that stock in a short couple of months. So great job there for it. But that was credit spread, right? So more of that, it can go up a little bit, it can go down a little bit, it can go sideways, and we still make money. It's strong direction move against me, which would be down, would be where we get in trouble. As long as we stay above 227.5, we're profitable.
Got it. And then another one that we've been hearing a lot, people talk about this week, pretty much every week, is Tesla. Have you been looking at Tesla's chart at all?
Tesla is one of my top three. It's one that I look to trade every single day. My top three right now in this market are Tesla, Nvidia, and Netflix. I've been trading them aggressively for the last 3 or 4 months. Here's my problem with Tesla right now. And I know I made the chart a little bit smaller, but because we trade off of fibs and moving averages, we're in the middle of nowhere right now. So this is what I call position 3 in the chair, right? Position 3 is back here. Hands behind my head. I can't reach the keyboard, right? And I'm just watching what's going on. When Tesla gets near a key level, whether it gets near this bottom line here at that 150.55 or that upper one of 162.07, that's when I'll go from position 1 in the chair to position 2, when I'm straight up in the air and I'm very focused on what's happening. And then position 3 takes me to the edge of the seat as I'm watching a rollover or a bounce come off of one of those key levels.
Yeah, and Tesla, I haven't noticed if it's been a leader or if it's been, just tracking like the overall market, but it does feel like with how big of a weighting now Tesla is in the S&P 500, on days where Tesla's down big or days where Tesla's up big, it can actually impact some of the bigger indices. Another, you mentioned NVIDIA as well, Rob. NVIDIA, I noticed actually, the Qs are up like 2% today. NVIDIA is not participating. It looks like the semis are a little weak today compared to the overall tech market.
Right. And if you look, NVIDIA it hasn't had a lot of legs to it. We've been very much range bound of about, $10 or $12 move, which is okay. There's still a lot of money to be made there, but moving averages have stopped working because we're not moving. We're just in that sideways pattern and nothing really taking place in there. But that 265.75 are some strong levels to be focused on if you're looking for short-term trades. Even just 2 or 3 days, there's great here. You can see where we closed up on this day, and just 2 days ago, this would be Tuesday's close. And here we are today. We hit up on that 275 before pulling back.
Yeah, NVIDIA right now, there's a lot of people who may have missed out on this move, or it's been on this incredible run really all of 2023, the past 4 months, since kind of AI chat GPT has like taken over really the lexicon of the investing world. And so I'm not surprised that there's still some buying activity up here. But like at some point you would expect that there to be people taking some profits, right?
I would agree. And we've got earnings coming up in a couple of weeks. I'm really interested to see where that lands them, if it breaks them out to the upside because of a surprise, or to the downside of with a forward-looking statement of, yeah, things have been good, and we see a little bit of a pullback. Either way, we're ready for that next move. It's been about 2 months, so I'm looking forward to see it break out of the 65-75 range.
Got it. And then how about one of your other favorite stocks getting ready to report earnings, Booking?
Oh, love them. I saw somebody on CNBC this morning. So, in the travel space, the only one you want to be looking at is Booking. Overall pattern. So if we bring it back just a little bit in here, overall pattern, nice and bullish, same time frame, end of December, we went from 1950, 40, somewhere around there, up to 2,600 and jingle right now. So good move up and a nice pullback here in January. And then we went sideways for about 2 months. And then we started these legs up where we're just getting this stretch, and we keep putting in higher highs and higher lows along the way. Now, when we look, although this is a fib pattern that's in here, we do have, actually, let's change that. We do have it's coming off of here, get a better angle. We do have a nice uptrend support level going on in there. And if we duplicate that and put a resistance in, you can see we've got a nice trend pattern in there. And where are we sitting? Right at the fib line, at the uptrend line with the 21 moving average there. The 8's a little bit in our way, but the 21 there. And a lot of opportunity. Right now, if you are trading Booking, I would keep my eye on that 26.63. We do have earnings coming up on the 4th. I believe it's confirmed on that date as well. I don't remember, but I'm pretty sure it was. But that 26.64 level is my short-term resistance right now. If what I'm reading and hearing is right on Booking, we're going to look at a really nice pop on them come their earnings.
Yeah, and I mean, I think what's interesting right now about watching Booking's earnings, and I was just talking about this, and I don't think it would necessarily be reflected in this earnings report because that's for the months of January, February, and March. But like whenever there is some sort of crunch where people are spending less money on vacations, on travel, then I think travel is kind of where we could start seeing that first. So it might be interesting to kind of watch Booking and some of these other travel stocks here and see if they start having some trouble, that it could be kind of a sign for the overall economy.
It very well could be. We're hearing, CEOs from Delta and American talk about great numbers. We're seeing, the economy is down, but travel is still up.
It hasn't happened yet. So I don't know, I'm saying, I think maybe eventually, like with higher interest rates, like we might run into that at some point, but it certainly hasn't happened yet. So it will just be interesting to watch.
It will, especially when you start looking at things like we're still in massive credit card debt in the U.S. We're seeing more and more debt go along, across the board. I think I'm concerned of the individuals that got into mortgages within the last year or two that they did not lock in a rate and they had balloon payment due or they were ARMs, adjustable rate mortgages. And now you're looking at where you could have been in at 3 and 4%. Now you're looking at 7%, possibly even higher. And I think we haven't seen that shoe drop yet of the pain that some people are going to be in because of housing markets.
100%. Rob, well, anything else you want to touch on today? Otherwise, make sure to pull up your page for Trading Like a Boss or Wealth Builders HQ and run us through that real quick.
Sure. Yeah. If you got time, I got two stocks, Netflix and NVIDIA, we can go back to and talk about the play for them if you would like.
Yeah, let's do it.
All right. So, guys, here's what I'm watching on Netflix. Overall bias is bearish. How do I know that? We've got lower highs, lower lows, and our price is down below our moving averages. Right? I'm watching that 321.22 for a close below. We stretched down a week and a half ago, came back up. We opened, came above. We stretched. We closed yesterday just there, gapped up. We retested that 321.22 today and pulled back. If we can get a close below that 321.22, look at 310 as your downside support. So 311, 312, somewhere around there would be my potential exit to the downside target. So that's Netflix. NVIDIA, same scenario. I like the pattern, but I want to see the breakout. And if the breakout comes and holds above that 275.88, look for the pullback and the bounce. If the breakdown comes below the 265.10, look for the retest and the fail down to 255. We've got a lot of room on both of these. You're looking at about $10 in each direction that this can move. If you do get the break to the upside, folks, watch out for about that 280 level because we have hesitated there multiple times. Okay. So just some setups as potentials to be looking at. All right. As far as tradinglikeaboss.com, guys, this is a site. This is one of our main sites, but this site is where we have all of our free resources are located on here. And looks like my computer is not acting nice.
Let me go ahead and drop that. I'll drop that link in the chat.
I appreciate it. Tradinglikeaboss.com has all of our free resources. You want to know what we do with Fibonacci? Go there and download the Fibonacci resource. You want to watch some of the live trainings we do? Yeah, I'll give you one. There's Protect and Preserve Your Assets. Basically, one of our coaches, Dale Zamzo, who was one of my original mentors, is going to show you a way that even if the market crashes and drops down 50%, you still will not lose any money. Right? With the strategy that he does, longer term money, it's retirement money. It is not trading money in and out every day. And then we do trainings on Mondays and Fridays each week as well. So live trainings where we do candidate analysis of the live candidates out there that we're looking at for the day.
Beautiful. Well, let me go ahead. Like I said, I'm going to drop that link in the chat, tradinglikeaboss.com. Rob, always good to get your insights on what's going on and your technical analysis. Anything, what are you looking forward to? I mean, it's almost summertime. Anything fun you got planned?
We're going to spend more time this summer in Florida as we're looking for a home down there. So that's where I think we spend most of our time this summer is down there. My wife is getting closer to retirement. She doesn't need to work, but she does. But she's in the school. I think one bad year and she's gone. And I'm hoping it's this year, actually.
All right. Well, there you go. Well, good luck on your Florida home. Let me know whenever that happens. Whenever you're finished, I'm going to have to come down and play some golf or something down there because, you know, especially here in the winter in Michigan, as you know, I'm sure living in the Northeast, it can get a little rough at times. Oh, yeah. In New York as well. Yeah, we're looking for it right now as winter type place ultimately. But, you know, the snowbirding stuff, we still have family here, kids, parents. So we're not going anywhere just yet. But ultimately, I think for now, that looks like the place we might wind up. Beautiful. All right, Rob. Well, enjoy the rest of your Thursday and have a good weekend, man. All right. Thanks, Aaron. Have a great day. No, yeah, thank you. Thank you for coming on. All right. All right, guys. Rob Roy, tradinglikeaboss.com. Always good to get Rob on the show, see what he's been watching, see what he's been looking at. So, yeah, tradinglikeaboss.com. All right, guys, we're going to wrap up a little early today. I've been on stream more than usual today, just with live trading as well. So got some other things to take care of. As always, thanks for tuning in. Smash the like if you have not already. And please subscribe to the channel. Give us a follow on other social medias, Benzinga on YouTube, TikTok, etc. And yeah, we'll be back. I'll see y'all tomorrow morning. This